Great to be on, Carl. Good to see you, even on basically every show on the network at this point. Um, um, in answer to your question, the reality is that if you look over the course of the last week and a half, the Nasdaq and the markets more generally have had a pretty stark rebound as a function of rates rolling over for periodically, and folks starting to think that maybe inflation is peaking. As you know, we're not macro economists. At the end of the day, we're bottoms-up stock pickers in the tech and consumer sectors. And, while there are certainly opportunities that we're finding on the long side, I think we've been able to preserve capital this year as a function of really spending an inordinate amount of time finding short opportunities. So to be honest with you, the price action that we saw today was sort of to be expected, given the rally that we've had and a lot of the negative fundamentals that we're seeing out there.
Yeah, that makes sense. On the long side, a couple names you point out. One is Avis on a travel leisure rebound specifically, and Five9. You're talking about tech that's been down a lot. In fact, you say some of the things you're concentrating on are risk-reward situations, even based on multiples from 5 years ago.
Yeah, I mean, one of the things that you hear people that are trying to pick a bottom in stocks, and they point to how far down stocks are from the peak. If you look at the software sector, just as an example, and you look at the multiples, the peak multiple for the fastest growing software stocks was in the 30 to 40 times revenue range, which, 30 to 40 times revenue. I mean, it's reminiscent of the dot-com era. And as we stand here today, those same group of companies are trading at 10 times revenue. Now, you would say, hey, maybe that's an interesting opportunity. But if you go back to 2017, that same group of companies was trading at 7 times revenue. And so, multiples itself isn't where we're going to find the bottoms here, because what we're seeing in a lot of companies is that the next leg of potential downward shift is in estimates coming down, where some estimates have started to come down versus not others. If you look at, you mentioned Five9, which has been one of our top holdings, and it's a stock that's certainly down a lot on the year and really since its peak last summer when it was about to be taken out by Zoom. Looking at a company that's a leader in the cloud-based call center software space. This is, just to contextualize, there's 20 million call center employees globally across the industry. Less than 20% of those are on the cloud. Five9 is one of the key leaders in that space. And this is a company that's gone from 20 times revenue to 6 times revenue. It's growing 30% consistently, and they're beating top line numbers by 10 to 15%. And we're looking out and saying, hey, we can buy this company now at 20 times EBITDA. So, that's the type of risk reward scenarios that we're gravitating towards.
Finally, Eddie, I don't have a lot of time, but on the short themes, online retail, e-commerce, I noticed today the ETF, the online retail ETF down, worst quarter on record. You're talking Carvanas, Pelotons, Lyfts. You don't have a lot of faith in those themes.
Look, I think one of the challenges that you see out there is if you look in the home furnishing space, or you look in the sporting goods space, or any number of these sectors, and you look at the 2019 government data and what was the revenue run rate for those sectors, and you look at where we're run rating today, we're somewhere like 40% above the 2019 levels. So you sit here and you ask yourself, you've had this massive pull forward of buying. At the same time, it would appear that most of the experts feel like we're going into a recession where the consumer, particularly at the low end, is weakened because of what's going on in the economy, because of the layoffs that you keep announcing every day from a different company. And so,
sure.
These companies have invested massively in increasing their cost structure, and they built a business that was outfitted for pandemic level volumes. And the real question here on a lot of those sectors is, what happens to the profitability of those businesses when revenues start to decline precipitously?
All right. Eduardo Costa, our thanks as always. Talk soon. Appreciate it.
Thanks, Carl. Great to be here. Talk again soon.